Good morning, everybody. It's Wednesday, November 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 2 at 425 and a quarter. January soybeans were down 8 3/4 at 989 3/4. And December Chicago wheat down 2 at 547 3/4. This morning, we had a couple of export sales announcements. 202,000 metric tons of soybeans to China for 24. Also announced 226,200 metric tons of soybeans to unknown destinations for 24. Good morning, fellas. Ben, maybe kick us off with a few thoughts here on the markets, what you're looking at today, and then we'll throw it around the room.
Yeah, I think, that we've talked pretty extensively about this being options expiration. There's a lot of open strikes, a lot of volume in the strikes that are around us. And corn has been a very orderly trade within the range. And I think next week we have to deal with the overhanging part of delivery. I always kind of look at that as something that keeps markets honest. And there's still a lot of volume that has to move out of these. So I think the next 7 to 8 days for corn is we might potentially see some things that people have been waiting on for a while. You would think that with that volume that you could see March maybe widen a little bit, even though it has not really done that in the last, since the Goldman roll, it's kind of come in a little bit. Beans, I look at that market and I can't get excited until something changes with the weather in South America. Certainly that can happen at any time. But the bean markets are making the one thing I would say there is they make a very consistent denial of positive underlying information, whether it was lowering the yield or continuing to see sales come across on daily flash sales. They shrug that off and they continue to move lower. I think Justin mentioned that Jan beans are 15 cents off their lows that they struck. And when you deny positive information over and over again, it doesn't inspire the mindset that we're going to rally 50, 60, 70 cents.
Sure. Dustin, what's on your mind this morning?
Currencies. I mean, the dollar index is back, moving towards its high again. You overlay like the Brazilian real US dollar chart over just the bean chart. And I think it's clear that a lot of the ongoing pressure we're getting, the headwind is coming from the fact that the dollar is really kind of, affecting our flat price. And this is happening when we're still seeing fairly good world demand. It's just that, forward markets outside of dollars look at that fairly pricey in the strong dollar market. So narrowing of the spreads, especially in corn and wheat, last couple of weeks here, and we continue to break into business. So I think the it's pretty steady to hold right here until we start to see some currency move.
Very good. Justin, anything to add to those comments?
No, just kind of adding to what we talked about yesterday, which is, when you have narrow spreads, strong basis, a reluctant seller, that's when you need to take advantage and really consider what, current interest rates look like for storage. If you were to sell now, we have a lot of growers like in Iowa and Illinois, where they can sell for a higher flat cash price now than they can for summer months if they contracted forward. So, just being smart with money management. There's lots of ways to re-own or do something, but when you have that kind of an environment with a big crop, it's very rare. It's rare to have record crops across a lot of areas, and then also have a flat or slightly inverted cash market. So, whether you're bullish or bearish, it's just, I think, figuring out how to sell that and how to, be the smartest with your money. I mean, you plug in like 7 months of interest or 8 months of interest at 4 to 5%. When you have a slightly inverted cash market, it's a big difference. So that's my only take. It's not really bullish or bearish. I think, Ben said it well. we're range bound right now. I mean, we're waiting for new information. Beans, I think are November 25 beans are 2 cents from contract lows. So I wouldn't rule out another leg lower in beans if South America weather looks really good. And yeah, we are breaking into business, but we have to do a lot of business in beans. This is our window, and if South America looks like it's going to be good, it's another 20 million tons bigger than last year. So that's constant elephant in the room. Is South America just keeps expanding, and it's a constant headwind for us. Our best bet is that Safrinha corn crop has a problem or something, to get our markets excited. Not to be a Debbie Downer, but we've had a good flat price rally. Cash markets are, what do we talk about, Ben? 75 to $1
Yep.
cash prices than they were at the lows. So we had a rally and record crops. So I don't want to, forget that. I think to say that any of these prices are going to take off and make some big leg higher, I think is a stretch, personally. So
I was just looking at the open interest here on options as well. And, we're talking about being in a range. The $4 line has 50,000 net calls and puts open, give or take. 420s have 50,000. 410s have 40,000 and 430s have 38,000. So there's a lot in here. And, the old axiom is not everyone can get paid as these things come to fruition. So I would be shocked to see us be outside of the 430 to 405, 410 in the next 3 days. I know that sounds trite when we've been here, but it's certainly a lot that has to get unwound.
Yeah, and Dustin talks about this a lot. If you look at global corn stocks, excluding China, it is relatively tight. I think the biggest, and that's why we've been relatively friendly for like new crop corn, these 25 corn, for example. The biggest risk, in my opinion, is soybean prices. Is you can be bullish, 436 new crop corn, but if soybeans go to $9, and I think there's a legitimate risk there if South America ends up being really good, and we get into that first quarter where farmers are undersold and they're having those conversations with the banker, and the banker decides to become the marketer. I do see some potential risk there, first quarter where, beans go to some extreme price on the downside, and that just drags corn and everything else down. I hope that doesn't happen, obviously, but it is a risk. So I think there's a lot of complacency here that, I'm nervous about. I hate to have a strong market opinion this time of year, but at the end of the day, if South America's gonna have a really good crop, and China's, Ben and I talked about this yesterday, China's got their own economic problems, and they just don't have enough buying power to come save our markets, I don't think. So.
Very good. Rylan, we're going to have cattle on feed Friday. I know some estimates have trickled out, but yesterday, we continued a nice pop in cattle. Hogs were pretty mixed, but what do you got for us here this morning?
Yeah, it seems like we saw a little bit of early cash trade in Nebraska, $290 for dressed. So asking prices are still holding around 187 to 188 in the South. So we'll see what comes to fruition here. At this point, market's expecting on feed for November 1 at 99.9, so pretty much unchanged from last year. Placements at 103.3 and marketing's at 105.1. We did have an extra marketing day in October, so that's going to kind of mess up the numbers a little bit. But overall, it looks like we're going to be pricing those in for the most part. It's been a really good run. Feeders have definitely led the charge. We're seeing some levels, pretty significant levels in the moving averages getting taken out in these cattle. So, we could definitely see some better technical buying. I just think everybody wants a little bit, doesn't want to take on too much risk without some certainty from cash, ahead of this report. But overall, I mean, the market's giving us some great opportunities now, and it just seems the feeder market's on fire. Good weather, good pasture conditions, and there's maybe a little bit of concern that there is going to be some throttling of feeder cattle imports from Mexico come January if there's some kind of new round of tariffs or a new trade deal or something. So I think you got a little bit of a panic buy going on there, and calf prices, stocker prices are just ripping. So naturally, the market's going to follow suit, and we did see open interest climb yesterday. On the hog side of the markets, overall, it's been kind of a big drop. We tested 40-day moving average support. The market's still kind of posturing for this near-term down, but we'll see if 40-day gets taken out. I think you could see a little bit of technical selling here, especially with cash week, cutout week. Ham volume was massive yesterday, absolutely exploded. So watching to see if we're going to pick up some demand on this break with carcass being down, cash being down. So just kind of seeing what the flow is going to be right now. But as we've been talking about, just good to have a little extra protection on these kind of freak rallies that really kind of come out of nowhere with the market kind of moving contra-seasonally, at least in the hog market. Cattle is kind of following that seasonal pretty well and could stay strong between now and the end of the month.
Very good. Appreciate the update there, Ray. One thing to point out, we will have export sales out tomorrow morning, 7:30 Central. So we'll take a look at that report and then certainly visit about that in the war room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. Certainly helps us out. It'll keep you up to speed on everything AgYield. Doesn't cost you anything to do so. So once again, thanks to everybody that supports the show and tunes in on a daily basis. We're doing this every day that the markets are open, streaming live, 8:15 Central Time on X, Facebook Live, and YouTube Live. Hope everybody has a great day, and we look forward to talking to you again.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.